Welcome to Bears in Exile. Today is July 13th, and this is the market overview from the road. Well, we'll be looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. So, I missed most of the day today, and when I had to go and work, we were at the highs of the day, and it looked amazing that the run that they were having. And we had talked about in the previous video that we were looking for a pause, let it catch its breath, etc. And certainly at the highs of the day, it looked like it was doing that. It would look like it was doing a lot more than that. And come back right at the close just to see what happened, and wow, what a difference a day makes, or part of a day makes, I should say. So, ended up today with another inverse hammer, this one actually being pretty and meeting all the criteria. And, with that kind of a whipsaw, it's dangerous. So that is why we use Guppy, because it lies to us less. And it's risky to do it in intraday, as we had a uptick and everything. But once we get to the end of day close readings, then we have something really to work with. So what do we see? We see that, we have the hammer. We can see that the short-term moving averages have leveled out. I was thinking at one point that we were going down for a bar test, and that's not what the short-term moving average is telling us. So you can see on the CCI we have a slight uptick. You can see on the stochastic it's way low. We can see on the 14-day moving average of the RSI that it is pointing up. As a matter of fact, I need the RSI. Hold. Okay, now we have the RSI. You can see that the RSI was overbought, went down below 70, and now it's pointing up again. MACD histogram ticking down, MACD itself ticking down slightly. So at this point, what can we infer from all of this? Well, it's a mixed bag, obviously, with the secondaries. But, you could say, okay, we had some buying pressure yesterday, got spanked down. We had more buying pressure today, got spanked down. That sounds like it's bearish. But if we look at Guppy, we can also see that, for the moment anyway, that we do not have a clear path for retesting the bar. We can see that the bar is getting some separation, although it is a mess still at this moment, and we are still above the middle Bollinger Band. So yes, it is a very mixed picture, and but it is not as bad as it looks for the moment. Going on to the SPX. We can see that we have an inverse hammer. It is not a gravestone doji, it's inverse hammer. And we are a hair below the middle Bollinger Band. Okay, that's not good. We can also see the bar is in a perfect flat line. We can see that the short-term moving averages are pointing down, most of them. And we can see that the CCI has a slight uptick. RSI has a slight uptick. Moving average of the RSI still pointing up. Stochastic is way low. The MACD is still ticking down. MACD itself is now ticking down. So, also a mixed bag, but it does have a more bearish connotation than the Dow does. On the VIX, we have, yesterday we had a hammer. Today we have a hammery looking candle, but it's not a hammer. CCI ticking down, RSI pointing up. Totally neutral RSI moving average, 14-day moving average. Stochastic very high, MACD getting the bullish cross. Well, once again another mixed bag, but what can we infer from this? Well, the bar is pointing up. The short-term moving averages are getting more crossover, but it's not looking that great. We can see that the hammery looking bar is bullish engulfing the um, I'm sorry, bullish looking hammer, hammery looking candle is bullishly engulfing the proper hammer from yesterday. So it does have a few things going in its favor. It is above the middle Bollinger Band line. Secondaries are mixed, though. Mixed, positive. So we're just going to keep going until we find something that we can latch onto. TNA, inverse hammer. We can see that the short-term moving averages are rather neutral. We can see that the bar is still a flat line. We can see that we are above middle Bollinger Band line. We can see that the CCI is ticking up, RSI is ticking up, 14-day RSI moving average ticking up, stochastic very low, MACD histogram ticking down, MACD itself ticking down. This is a mixed bag too, but you know, if we had more crossover or going into a flat line of the short-term moving averages, that would be a much greater indication that we're about to get a flip and head on through the flatline long-term bar. So that's really what I'm trying to point out here. UUP. We finally get something. We can see that we gapped down. We took a little bit of the gap out of it, but could not completely fill it. So this was good. This was a proper, we had a hammer, and we reversed from that hammer. We can see that we are still above the middle Bollinger Band line, although at one point today we were not. The bar is just about gone. However, the short-term moving averages are giving us a downtick. Of course, that was met intraday, so this is meaningless now. And we have a downtick on CCI, downtick on RSI, downtick on stochastic, about to cross through the 14-day RSI moving average. I only have this here because when it has crosses, it tends to do something. Atypically, if it's a bearish cross, you get a bearish move, but not always perfect. The timing isn't always perfect, and if the RSI moving average is low and it crosses through it, normally you get, like back here, a good move. So, with the stochastic coming in on the RSI moving average right here, could we get a major move to the downside on the dollar? Absolutely we could. We had a 2-penny move intraday today that really fueled the markets, at least for a while. We have a downtick on the MACD histogram. We have yet to see a crossover on the MACD itself. So there is a possibility here that we are going to have further weakness in the dollar over the next few days, in which case that will help the market. So now we have something to work with. FXE, we had the outside the lower Bollinger Band we talked about yesterday with the inverse hammer. We did get a jump up today. Stochastic ticking up. Look, here's the RSI 14-day moving average here. If you can get across, it should have a move. RSI ticking up, CCI ticking up, MACD histogram ticking up, MACD waiting to figure out what to go do with itself. So we could have further strength in the euro over the next couple of days, which would be good for the market. Interesting. So now if we look at the Dow, we see proper inverse hammer. We look at the SPX, proper inverse hammer. All of the sentiment at the end of the day where the world was coming to an end and everything could very well be overblown, and we don't have further consolidation crossover in the short-term moving average, signaling a flip over before going through the bar, although we don't really need a flip going through the bar since the bar is non-existent. But there it is. With that kind of context, the hammery looking thing on the VIX makes more sense. Going on to gold. We are kissing the top of the upper Bollinger Band. We do have one thing that we do have some excessive separation in short-term moving average, but notice we do not have wobble. So one out of two things, this is not as strong as it normally is. Normally when you have extreme separation, you do have wobble. If we get a downtick on gold tomorrow, we will see the bubbliness revealed on this, and who knows, maybe even get a downtick giving us a target of something like 150. But beyond the MACD clicking up, MACD histogram ticking up, we can see that the stochastic is very high. We can see that the RSI moving average is very low. RSI is ticking up, not quite to overbought, and CCI is extremely high. So we should get a sideways or downwards tick tomorrow. We could get a sideways and uptick, but gold is pretty high at the moment, and SLV, our not so favorite, actually is above the upper Bollinger Band. Amazing. We even have a gap. I'm still staying away from this one. It's too much like a double flat line. Actually, it is, even though we are getting some cross and separation of the short-term moving average, it being above the upper Bollinger Band line, I would need to see it really pushing it up and expanding it. But CCI massively high, RSI nice click up, and everything else essentially a little bit of a click up, but I'm staying away from that. So in a nutshell, I am not counting out the market as of yet. I have no position at the moment, so essentially neutral, but I really am not counting out the bulls as of this moment. There is just too much evidence that that they are going to be able to get back as the news dies down and try to make another run. I don't think that the run will be successful at this moment, but they are not they're not finished yet. And if we do test the bar, break through it, then I say that they're done. But for the moment, it is what it is. So tomorrow should be very interesting one way or the other. And as always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.